Presentation for Real Estate and Financial Management, Business 428 through BYU-Idaho. My name is Connie Chatelain, and I'll be presenting about residential real estate. What is residential real estate? It's anything that may contain either a single-family or multi-family structure that is available for occupation or for non-business purposes. There's lots of types of homes. All single-family type homes and 1 to 4 family rental residences are considered residential real estate. Condos and cooperative units are also included in the residential real estate category for investment purposes. Many people invest in residential real estate by buying homes or similar rental properties and then become landlords or even sell that home. The types of residential real estate include apartments or flats, multifamily houses, terraced houses, condos, cooperative, semi-detached duplexes, single-family detached houses. Those are attached or multi-unit dwellings. And then the portable dwellings include mobile homes, houseboats, and tents. The real estate forecast for 2017 to 2020 is looking really good. There's something called the President Trump factor, or the Trump X factor, that I'll explain. It's despite all the rhetoric and renegotiation of trade deals, the U.S. housing market is in good shape, and in the U.S., most real estate sales and real estate investment experts are predicting a strong year ahead through 2018 and beyond. In some markets, home prices continue to climb with major markets, and then the price growth potential in the next 5 years is really good. There's some best cities to invest in for real estate, and also if you're selling in 2017, there are speculations of a possible housing crashes in some big cities, which include Miami, Los Angeles, San Francisco, Charlotte, San Diego, San Jose, Denver, which is near me, Seattle, and many other overheated markets. And I can tell you it does seem overheated in that area of Denver. It has people listing. I'll be curious how this turns out. It's said that these are interesting times. The real estate forecast is still good. The short list of positive factors that will affect the U.S. housing market include moderately rising mortgage rates, low risk of a housing crash in most cities. Millennials will be buying. They'll be coming into as the main home buyers in the next few buying years. There will be a trend to government deregulation. Labor shortages will push up costs of production and incomes. The economy will keep going, and the longest positive business cycle might occur in history. And then, of course, the biggest factor is President Trump, some of his decisions. The repatriation of business, investment, and jobs back to the U.S. may come with a big price, high dollar, and strong inflation that will drive home prices higher, and renters will be desperate to start building financial equity and own a home in 2017 and 2018. And there's that slide. So housing constructions will start to rise even more. It's predicted that new home construction won't keep up with demand. However, it's recovering, and we'll see more renters become homeowners over the next decade. Mortgage rates are forecasted to stay low. To some degree, there isn't going to be much change. Some are calling this the Trump effect. With President Trump in power, lending requirements are expected to be eased. Land is going to be opened for more development, and this should stimulate home purchases. With employment growing and wages moderating upward, the market is set for growth. Yet some housing forecasters still cling to the idea that housing starts will moderate after the strong growth to 2020. Here's a stat it shows that the U.S. economy hasn't recovered from the Great Recession housing crash of 2007. Single-family spending is rising rapidly, yet no one believes conditions for high inflation exist. It points to years of solid, healthy growth ahead, with an unfulfilled demand for single detached homes. So that means that the residential real estate will be strong. The employment outlook is good. The job market is strong. Total employed persons in the U.S. is expected to grow 800,000 over the next 2 years, which will promote existing homes or resale of homes. And construction spending will continue to increase. Prices will rise to 2020, it's expected, and then the construction will slow. So here's been presented a graphical synopsis of factors that will support a strong housing market for the next 4 years. And then this resource that I got most of this information from is called Gord Collins, and they are a real estate promotion business. But it says, there's a side note that says, realtors who have feared investing in digital real estate marketing should calculate the long-term value, LTV, new term for me, of clients you build today. So I think that that's really a good idea, that we should be aware of what's going on in the real estate market, but also that there's a lot of ways to promote residential sales and real estate purchasing. So anyway, some of my resources were Home Guides and Gord Collins, and then some information was directly from Wikipedia. And this has been my presentation, and thank you.